Welcome to our look ahead to the week starting Monday, the 13th of March. Let's look first of all at what's coming up on the diary on the economic agenda, where we have the central bank meetings are really the centre point to watch out for. Monday, let's kick off first of all, 13th of March. We wake up in the European markets having had Japanese machinery orders and also producer prices. Foreign direct investment in China, a big number to watch out for overnight, Sunday come Monday, and in Italy, industrial production. The 14th of March, the second day, Tuesday, Australian business confidence. We've got more China data as well. Big news in Germany, the ZEW and also inflation figures, Eurozone industrial production, the producer price inflation number in the States along with the Red Book, and the OPEC monthly report with oil under pressure. That'll be an interesting one. Wednesday 15th. Starting off again in the overnight markets, Australia consumer confidence figures, Japan, we've got numbers out as well. In France, we've got CPI, US IEA oil market report. There's a lot of oil market figures out actually next week. UK unemployment rate's a big one for the Bank of England. Eurozone, fourth quarter employment change, and data out in the States, including interest rates, sensitive CPI data, retail sales, the Fed interest rate decision as well. 6 p.m. UK time on Wednesday evening. By the time we wake up on Thursday, we'll have had the Bank of Japan interest rate decision. And later on in the day, we get the numbers from the Bank of England. High noon, we get the interest rate decision, the details on the minutes and also the way the vote went. Very much expecting a 9-0 decision to leave things as they are. Eurozone consumer prices and the Philly Fed in the US, along with the weekly jobless claims. And Friday rounds off a week on the economic agenda. Next week, Friday 17th of March, we kick off with trade balance details from the Eurozone, and in the US, industrial production, consumer sentiment, and the Baker Hughes oil rig count, which comes out at 6 p.m. UK time on Friday evening. Josh is with us with some more analysis of some of these. I guess it's really the right thing to do to put all these central bank decisions together. We've been talking a lot about the Fed and the way that Fed fund futures now indicate a near almost certainty that we're getting an interest rate rise. In terms of the trades to watch out for, what are you watching for charts?
Yeah, I think it's going to be a big week. Like you said, it's a big week for oil and it's a big week for central banks. I think probably the big focus is going to be on the FOMC, of course. Bank of England, unlikely to actually do anything really. Bank of Japan, I think we're starting to see them moving away from that sort of period where they were going to expand their stimulus and more towards the thought of tapering and reining in interest rates and the like. So, I think it's more about the linguistics when it comes to the Bank of England and the Bank of Japan. It's more about action when it comes to the FOMC. Like you said, Fed funds futures pointing to a 100% chance of a rate rise in the US. I personally think that's nonsense. It doesn't necessarily mean it's not going to happen. Doesn't mean that it's not likely to happen. I just think 100% is not that nailed on. Nevertheless, I wanted to talk about the dollar basket because, of course, when we're talking about the dollar, this encompasses a number of different markets to trade it against. This is a weekly time frame. It goes to show that we have been seeing quite a lot of indecision over the past 2 weeks. And this is set within a period that's supposed to be a recovery for the US dollar. Bearing in mind, we are expecting to see them raise rates next week. So for us to go into a period of time where we're expecting them to raise rates and that's all it can muster, it's not necessarily a great sign, quite honestly. The daily time frame here will show you that, we have been seeing a little bit of downside at the moment. And crucially, what we're seeing is a move lower from a failure to create a new high. Now, this has happened before, so we do have previous. You can see the last time that we failed to create that new high, we were selling off, but we didn't crucially take out that previous swing low. So that, I think, is going to be really key to setting us up for the week ahead. Now, we can see here on the 4-hour chart, we've got this ascending trend line. Everyone loves a good line. And we've also got the 100-period SMA here on the 4-hour chart, right, which seems to provide good support on a number of occasions. It gets there or thereabouts. And that's pretty much where we are at the moment. So we're at a really key juncture right now. We can put on the fib and see if there's any sort of decent retracements. It does look like a relatively deep one. And lo and behold, we've got the fabled 76.4. So all in all, we are at a really crucial area of support right now. And if we break through this, and crucially, if we take out this 101.12, then that's doing something that it didn't manage to do back here. And that's following up the failure to create a new high with the creation of a new low. And that could point towards further downside for the US dollar. So coming at a time where we're expecting to see the Fed actually raise rates, we could actually see the dollar going in a complete opposite direction. So Let's see whether this big area, this big confluence of support holds up today. And if it does, then we could start to see it strengthening from here. But if it doesn't and it takes out this 101.12, then the writing could be on the wall for the US dollar for the time being, at least.
Let's talk about sterling very quickly as well, because sterling against the US dollar, we got that Bank of England interest rate decision, as you say. Really, it's not expected to do anything this time around. And I know that with the markets looking as though we could well see sterling disappear below the 120 level, we're at a fairly key level.
Yeah, definitely. And, it's a difficult one, because what I'm looking at in terms of the chart is that we're getting this pullback, but it's set within, again, this failure to create a new high. And I think that is a real big warning sign. You can see here we had that previous high set in. We tried to rally through to that number, failed to do so. We're selling off now, and because of that, I don't necessarily think, I want to be placing a trade at, let's say, the 76.4 or a 70% fib. I don't necessarily want to be going long until I get shown otherwise with price action. Bear in mind, if I was within a highly trending market, the creation of, let's say, lower highs and lower lows on a continued basis, then I'd be happy taking a trade at a pullback without necessarily seeing a reversal signal. This isn't that kind of situation because of the fact that we haven't got a continuation of the pattern towards the upside. In actual fact, we've got a higher low, which is bullish. We've got a lower high, which is bearish. So we've got the potential for a sort of symmetrical triangle situation, which all in all points towards consolidation. Now, in terms of price action, the daily time frame actually shows you that we have come into the 76.4. Consolidation, we're in the third day in a row around about that level, and actually we're starting to gain a bit of ground. But, and this goes to show why you should be using smaller time frames to an extent, price action itself hasn't actually shown any sort of reversal. We've certainly seen some sort of consolidation. Could this be a base? Potentially, but we haven't necessarily seen anything to indicate that this is a reversal for this market. So yes, it's flatlining. Yes, if you look on the daily time frame, we are in the green today, and that comes around the 76.4. But until we start taking out some of these key swing highs, you can only say that this is just consolidation. And certainly if you look at, say, the near-term one, which is 12214, that would also necessitate a breakthrough this 100-hour SMA, and that hasn't happened throughout March to date. So let's keep an eye out for this one. There is a potential for us to bounce from this 76.4, but we do need to take out this 12214 for that to come to fruition.
Okay, all right, Josh, thanks so much indeed. That's taking a look at a couple of charts looking at next week's news. And of course, the Bank of Japan comes at a time when the Nikkei is at a 15-week high. Much of that has been prompted by the weak Japanese yen. So that's another trade to keep in touch with. A quick update, if we can, on what's happening on the corporate agenda, because next week's got some interesting companies. There's nothing too monumental. Monday is, as ever, a very quiet day. Let's take a look at what's happening on Tuesday, where things begin to get in gear a little bit more. Here in the UK, we've got Antofagasta and Prudential, a couple of companies worth looking at. We've got Ocado as well, Pantheon. This is a company which is in the AIM listed shares. It's worth watching. Volkswagen, one of the big ones, reporting next week on Tuesday. Wednesday's list includes, you've got Hikma Pharmaceutical, Clinigen. This is an interesting little company, FTSE 250 business now. Cape, Eon as well, producing figures. BMW out with numbers as well. Monsieur Bricolage, Oracle in the States, watching for that as well on Wednesday. Thursday's trade, list of those companies reporting earnings. A quick snapshot. Sainsbury is one of the bigger ones to watch there today. The Challenger Bank One Savings also on numbers on Thursday. Adobe Systems in the States. We've got Balfour Beatty here in the UK, and also we've got the Italian reinsurance company Generali. And on Friday, just to round off the week, a quick snapshot of those companies reporting earnings. Barclay Group, a house builder, in amongst the list there on Friday. My pick for next week, definitely watch out for Deutsche Bank, and more indications that they're getting things under control, that John Cryan is keeping a lid on the spiralling costs and the concerns about debt, and also Volkswagen, of course, as the company continues to repair itself from the emissions scandal, which has really been dogging a lot of time of management, new way forward. Volkswagen, interesting numbers out next week. Josh, what have you got in terms of what you're watching? Because I know that in amongst the mix, Antofagasta is one of those that you're wanting to view, because we've been watching what's happened with the copper price.
Yep, certainly, and we've been seeing price really recover alongside that. Now, I wanted to look at the weekly time frame to give you that wider perspective of exactly how it's going on price action terms, and we can see here we certainly have seen a very strong year and a bit. Certainly the turn of the year from 2016 was definitely the time to buy, but hindsight is a wonderful thing, but you can see that we have got a great trend coming in play here, and crucially we've taken out this first major swing high on the way out of that whole bottom that we've got here. Now we are moving lower, but we haven't taken out the low that we've got here, 648, and as such this sell-off to me looks like a buying opportunity. Shorter term, well, daily, you can see that actually we've broken below what could be an interesting support structure. You can see a sort of topping pattern there, call it what you want. I don't think that one's in the textbook. You can see we've got previous resistance as well. Now that we've taken out both of those, it does look like we could be set for a little bit of further downside, but like I said, that could be a good thing. That could give us a potential setup for long entries. And if we look here, so far we've got the 61.8 that we're responding from at the moment. If we did drop and we got back towards this 700 kind of up to 720 kind of area, that'd be a really interesting area to get long. But I do think we've got further legs towards the upside, and this downside at the moment, unless you're in the share already, is actually could be a blessing in disguise and could give us a good opportunity to get into this market towards the upside.
What about the retail space? We've got Sainsbury's next week. The retail space has been under pressure. Consumers find it difficult to finding more money to spend. We know that prices are going up, especially food prices. What about Sainsbury's as a trade to watch for?
Sainsbury's is a difficult one because the chart itself, I mean, this is a case of a trend line that probably shouldn't work but kind of does. I don't draw trend lines that this usually, and I was looking at this on, say, an hourly or a 4 hour, and I was thinking, where's this trend line come from? But it's incredible how much it's actually been respected over the past couple of years. You can see we've got this long-term trend line coming into play, and lo and behold, this week it's been the low of the week once more. So are we going to utilize that as a base? Well, I do feel like people are feeling a little bit more positive about the sector as a whole, certainly after a period of no one necessarily wanted to touch it because of this whole massive price wars that's still ongoing. But we do of course have the whole Argos thing to boost the prospects of the firm going forward, and so are we going to use this as a base? Well, irrespective of whether that trend line holds or not, the shorter term price action does show you that we're pulling back a little bit now. But if you forget about that one big spike, we do have in general a sort of nice uptrend coming in play here. So it is sort of gradually building. You could wait for the break on a 277 or just take it as the fact that we have seen some nice pullbacks, but generally with these wider swing highs we seem to be sort of gradually tracking higher. So it does look like we're probably going to push up onwards from here, and this strange trend line that seems to work somehow, hopefully that will give us enough support to be able to boost us on for the next leg higher for Sainsbury's.
And I know the other one you want to look at was Prudential. This is a company which is reporting in a sector which we've seen a lot of numbers out recently, some pretty good figures as well from the likes of Aviva. What about Prudential?
Yeah, definitely. This is a bit more of a clear-cut trade, quite honestly, because we can see we've got this really nice symmetrical triangle in play here with a very clearly defined resistance level. Now, when you have a triangle like this and you have a very clear sort of neckline, so to speak, 1648, 1649, it's a lot easier for you to actually say it's broken or it hasn't, because there's not really much artistry to it. A trend line, people might draw it from the body, people might draw it from the wick. There's no mucking about when it comes to a horizontal like we have here. And you can see that we have been trying to break through that. Certainly if we look on the 4 hour chart, it should give us a little bit more detail there. So you can see there that we've finally seen an hourly close, or on this case a 4 hour hourly close up above there. We are seeing a bit of a weakening now, but actually that could give us, we've got that buy signal, we've got it starting to move lower. That could be a good thing as long as we don't take out this near term swing low at 1623. This weakness we're seeing at the moment, maybe it's just going to hold up at 1649 and push higher, but I do feel like this area could be a good buying opportunity now. It seems to have its heart set on a break higher, and certainly if we look at the wider perspective, the move coming into the triangle is always very important. We're in a wider uptrend. We have a consolidation period which now has higher lows and flatlining tops, and it's closing in on that and now trying to break through at the top. So actually I think it's a really good time for us to be looking for longs for Prudential. Sometimes you get fake outs and it looks like it's broken higher and it will turn lower. That's markets for you. They don't always work perfectly, but it does look like we could be seeing this market push onwards and upwards, and in which case you're going to be looking back towards these peaks that we have here, 1762, for a market that certainly looks like it's got over the downturn that we did see in the back end of 2015.
Okay, Josh, thanks so much indeed. Taking a look at three stocks to watch in a week which is really dominated by central bank meetings. That's the week starting Monday, the 13th of March.